I don't have that.
If you don't have that, then you don't have coverage.
Then I don't have coverage. I only have coverage for Jan 1 and Jan 2.
Correct.
On that new policy.
Correct.
There you go. Man, that's a whole new episode.
That is
that's a whole new episode, 100%.
It's very, very confusing. And I'll be honest with you, most people will not understand it.
Yeah, it got me.
Because it's very confusing. And whenever I look at, so it happens with contractors a lot. Contractors will buy policies. Claims made policies are usually very inexpensive.
Well, sure, because
it's year to year.
Your liability is literally in this very defined spectrum.
So there are companies out there that sell a lot of claims made policies for contractors.
Why? Because they want the sale. They don't care about the coverage.
Contractors don't understand the difference between claims made and per occurrence. And so they go with the claims made. Well, heck, you were $2,000. They were $2,000 cheaper. So we went with that. Yeah, but all that prior work that you've done is not covered.
What if? What if
something,
and that's the whole thing with insurance is the what if.
Yeah. So when you look back at the history of insurance, they figured this stuff out. Hey, why are we on the hook for something that we weren't even insuring at the time?
Yeah. And
if we're going to insure it, we want more money.
Hell yeah.
So the premium's higher.
Makes sense.
Now, it takes about 3 to 5 years for the premiums to
level out.
Kind of level out between claims made per claim and per occurrence.
Well, sure, because then the likelihood of something happening 30 years later
is very small, but it can happen.
Sure. I think it's
could
fair to say that anything could happen. But I do think in most cases there will be some form of statute of limitation that gets,
or there's an endorsement on the policy that says we only go back so many years or whatever.
Sure. Like 30 years, I feel like is a real, like nobody can really.
But there is money on the books going back for stuff that happened in the 80s and the 90s, and so they have to keep. Obviously it shrinks. It shrinks how much they're having to keep. But it's there. They have to actuarially. They have to keep it there.
That is the only. I think that's the only job I've not had in insurance.
Actuaries
is being an actuary. So no, that I wouldn't. That I don't know. But I do know doing claims.
I would not want to be an actuary.
Well, no.
I don't think like they do. They
actually I wouldn't mind if it's just getting drunk in a coffee shop. Then I'm kind of down.
Well, there you go.
Like call this a coffee shop and let's call it good.
Yeah.
But when I was doing claims, when I was on my way out, they were really cracking down on you have to make sure. So when you get a new claim in, you set the reserve.